Welcome to the NASDAQ 100 weekly market pulse for the trading week of August 3 to 7th, 2026. I am Kollol Hossain here, and we are going deep into the tech-heavy index performance this week, breaking down the numbers, the winners, the losers, and what it all means for growth investors. Let's get started with the numbers. So the NASDAQ 100 index surged significantly this week, climbing an impressive 1,448.11 points to close at 29,722.30, representing a robust 5.12% gain that reflects renewed enthusiasm for technology and growth-oriented stocks. Monday kicked off the week with a powerful 502.61 point advance, sending the index to 28,776.80 as buyers stepped in aggressively. Tuesday continued the buying frenzy with an absolutely massive 956.36 point leap, pushing the NASDAQ 100 to 29,733.16 as momentum built to extraordinary levels. Wednesday saw a modest pullback of 245.37 points, and Thursday experienced another marginal dip of 114.46 points as its profit taker emerged. But Friday brought the pullbacks in force, with the index rallying 348.97 points to finish the week at 29,722.3. A stellar close that capped off an exceptional week of gains for the tech-heavy benchmark. So, what the sector gainers? The telecommunications service sector absolutely dominated at the leaderboard this week, skyrocketing an eye-popping 16.22% as investors piled into this high-growth segment with remarkable enthusiasm. Communication equipment followed with a stellar 14.14% advance, while transportation services climbed an impressive 11.27%. Broadcasting and communication equipment surged at 10.75%, construction and materials rose 7.75%, and semiconductors gained 7.69% as cheap stocks found renewed favor. Biotechnology jumped 7.11%, EDP services advanced 6.45%, and computer software climbed 6.03%. Industrial machinery rose 5.84%, computer communication equipment added 4.81%, and cable and other pay telecommunication television services gained 4.57%. This is the chart here. Oil and gas production emerged as the weakest link, tumbling 5.39% as energy prices retreated. And profit taking hit the sector hard. Electronic components weren't far behind, sliding 4.33%, while catalog specialty distribution declined 3.73%. Medical dental instruments fell 2.93%. Computer services dropped 2.92%. And electric utilities declined 2.02%. Beverages slipped 1.67%. Packaged foods fell 1.36%, and aerospace edged lower 0.57%. So what are look at the graph, and now we are moving to the what the gainer and loser. At first, gainer side. Team absolutely stole the show this week, rocketing an astonishing 43.74% higher as investor scrambled to get exposure to the high-flying software named Planet Technology PLTR, followed with a spectacular 36.90% surge, while Insmed Incorporation INSM posted a blistering 33.16% advance that captured market attention. Shopify Incorporation HOP climbed 29.54%, Airbnb soared 18.21%, and Aram Holdings PLC ARM jumped 18.20% as a semiconductor names found renewed favor. Rocket Lab Corporation RKLB advanced 17.61%, Space Exploration Technology Corporation rose 16.22%, Lumentum Holdings Incorporation LITE gained 14.14%, and Marvel Technology Incorporation rounded out the top 10 with a stellar 12.87% increase. Notably, the computer software sector dominated this list, with three entries showcasing where the real institutional buying power was concentrated. The average gain among the top 10 performers was an impressive 24.06%. Now the loser, Honeywell Corporation HONA found itself at the bottom of the barrel this week, plunging 19.09% as selling pressure intensified dramatically. Western Digital Corporation WDC followed with a leap with a steep 17.62% decline, while Avalon Corporation APP dropped 14.61% in a challenging week for this stock. Datadog Incorporation DDOG fell 14.50%. Nebius Corporation NBIS declined 11.58%, and SanDisk Corporation SNDK slide 5.89%. As electronic components faced headwinds, Diamondback Energy FANG tumbled 5.39%, Alphabet Incorporation Google dropped 5.14%, Alphabet Incorporation GGOZ fell 5.10%, and the Kraft Heinz Company KHC rounded out the list with a 4.16 for decline. This computer software sector was most represented here with 4 entries, indicating that even within the strongest sectors, there were notable pockets of weakness. The average loss among those top decliners was 10.31%. So now we can move to the PE ratio analysis. The valuation landscape this week reveals an extraordinary divergence between the market's most expensive and cheapest stocks. Intel Corporation leads the high valuation group with staggering 782.7 times PE ratio, signaling extreme growth expectation priced into the semiconductor giant. Microsoft Technology MCHP follows at 450.4 times, while Planet Technology PLTR trades at 407.0 times, and Datadog Incorporation at 383.9 times, highlighting the premium investors are willing to pay for technology exposures. Tesla Incorporation commands 301.7 times, Astrolab at 270 times, Axon Incorporation Axon at 194 times, Lithium Holdings Incorporation LITE at 166.7 times, Warner Bros. Discovery WTB at 150.4 times, and ARM Holdings PLE at 135.6 times. The average PE among these high players stands at astonishing 325.2 times. On the flip side, Comcast Corporation CMCSA offers the most conservative valuation at just 4.6 times, followed by Charter Communications CSTR at 5.3 times and MicroStrategy Incorporated MSTR at 7.1 times. Diamondback Energy Incorporation traded at 10.6 times. PDD Holdings Incorporation at 10.8 times, PayPal Holdings Incorporation at 11.4 times, Ferrovial ACP FER at 12.3 times, Exelon Corporation EXC at 16 times, GE Healthcare Technologies Incorporation at 16.9 times, and American Electric Power AEP at 17.6 times. The average among the value names is just 11.3 times, creating a remarkable spread that highlights the stark segmentation between growth and value investor in the tech-heavy index. So who are the leader here? Who are the leader here? Turnover leaders, market liquidity surged to truly exceptional levels this week, signaling intense capital rotation that often precedes significant market moves. Micron Technology dominated trading activity with a mind-blowing 19.6 trillion in turnover, making it most actively traded name by a considerable margin. Nvidia Corporation followed by closely with 17 trillion, while Microsoft Corporation recorded 12.29 trillion and Apple Incorporation saw 10.29 trillion. Change hands. Advanced Micro Devices AMD generated 9.8 trillion. Amazon Corporation AMZ and traded 9.02 trillion. And Planted Technologies PLTR riding its incredible 36% gain generated 8.06 trillion in turnover. Alphabet Incorporation Google traded 7.62 trillion, and Tesla Incorporation saw 6.58 trillion, and Sandisk Corporation rounded out the top 10 with 6.10 trillion. The technology sector commanded attention with 7 of the top 10 positions, highlighting concentrated institutional interest in the market segment. Average turnover across leaders reached approximately 10.661 trillion, representing extraordinary liquidity that provide excellent trading opportunity while also suggesting potential inflection points as consensus views as tested in real-time trade. This is the visualization here. So NASDAQ 100 weekly summary and investor takeaways. The NASDAQ 100 delivered a stellar 5.12% gain this week. The index opened at 28,274.20 and closed at 29,722.30. Atlassian Corporation emerged as the week's top performer with a stunning 43.74% surge. Honeywell Aerospace Corporation was the week's biggest loser, falling 19.09%. Telecommunication services was the best performing sector, rocketing 16.22%. Oil and gas production was the worst performing, declined 5.39%. Average gain among top 10 performers for 24.06%. Average loss among top 10 declines 10.31%. The NASDAQ 100 demonstrated a powerful bullish momentum this week with remarkable strength across most technology subsectors. Computer software dominated the proceeding, accounting for 3 of the top 10 losers, indicating both the opportunity and risk within the concentrated segment. Telecommunication services and communication equipment showed extraordinary strength with gains of 16.22% and 14.14% respectively, suggested significant capital rotation into these high growth areas. The semiconductor sector also showed robust performance with a 7.69% advance, reflecting continuous enthusiasm for chip-related names. The extreme valuation is spread between high and low PE stocks, with Intel at 782.7 times and Comcast at just 4.6 times, highlighting the dramatic segmentation between growth and value investors, creating opportunity for both caps within the tech-heavy index. So, investor takeaway and strategic insight. Growth focus. NASDAQ 100 is technology, heavy focus on companies with sustainable growth, strong moats and innovation pipeline, monitor earnings quality and guidance. Sector rotation. Be aware of rotation between technology subsectors, software, semiconductors, internet. Consider thematic exposure to emerging tech trends. Volatility management. NASDAQ 100 is more volatile than broader index. Use appropriate positioning, sizing, considering options for hedging and maintain cash or opportunities. Earnings sensitivity. Tech stocks are highly sensitive to earnings reports. Focus on companies with consistent execution and positive guidance revisions. Long-term themes aligning with secular trends like cloud computing, AI, digital transformation, and cybersecurity while being selective on valuation. That's all. This is our today's this week round in. So if you don't yet subscribe my channel, please subscribe my channel so that you can get up-to-date information about stock, US stock market, NASDAQ and SP 500. Hope to see you again for the next week. Happy weekend. Bye for now. Thank you very much.